Hi, this is Dave, and welcome to the weekly market recap, closing out the week for, it's already closing out the week for Friday, January the 31st, 2014. Recording this video on Sunday, the February the 2nd, so we're just into the weekend here. I'm just going to try and do a fairly quick video this week. There's not really a heck of a lot going on. In fact, I haven't really been doing all that much in the markets the last week or two, simply for the fact that we don't really have a heck of a lot going on. So let's just take a quick look at where we are in the market right now. And what we're doing is we're measuring, here's a low and here is a high. And essentially what we've done is we've drawn the fibs from this high to low. This low to this high. I apologize, I've got a lot of stuff on the screen here, so let's just make this a little bit more prominent. This low, this high, and you can see we're coming right into a 50% retracement area. You've got the 618 a little bit lower, and you can see we've got 15,670 in the Dow futures and a little bit lower around 15,600. You've got like a zone of support right in here. And all we're really doing is we're testing that zone coincides with this low right into this level. So you've got a couple of positives and a couple of negatives going for this market. So let's talk about the positives. The positives are that, we're right into a pretty strong support level where you're getting a lot of confluence between, a support zone, a fib level, and you've also you've got, if you look down here at momentum, you've got momentum bottoming here, and it has the potential to roll higher, from the stochastic point of view. And, this is still an uptrend until proven otherwise. So those are the positives for this market at this point in time. Now let's look at the negatives. So the negatives at this point in time are that the MACD is starting to cross below the zero line. Okay, that's a negative. Another negative you've got is this cyan line here. The market, the Dow at least, has broken that. This is a 5 ATR20. So this is sort of like a trailing stop. So it's broken the 5 ATR20, and that's a negative. You've sort of got a mixed scenario here, and basically where you're at is you're just at a key line in the sand area, and the other negative, let me just back up. The other negative is you've got the 8-period moving average crossing below the 21-period moving average right there. This is a negative crossover. So you've got a lot of things coming together here where you're sort of at a key inflection point, you're at key support, and you've got a mixed sort of body of evidence in front of you in terms of your indicators and where you're at. So at this point in time, I'd really like to see, are we going to hold that support level, and is this going to resolve itself back to the high side, or are we going to bounce and break through that support level? So I'm just sort of sitting on the sidelines waiting to see what might happen. If we look at, I think we talked about this last week. Oops. Sorry, I apologize. Okay, so if we look at, here's the seasonal tendency for the Dow futures, and here's where we're at right here, and then you can see that the month of February just sort of chops sideways to to slightly down, and then there really seems to be a decent buy point in the end of February, the beginning of March, going by the the 5-year seasonal tendency. Now, if we look at, let me just expand this chart out. If we look at the, let me just format this. If we look at the, okay, this is going back 10 years. Okay, this is basically the 5-year tendency, but if we look at the 10-year tendency, okay, well, at any rate, the 5-year and the 10-year are They're pretty similar. I've compared the two. I'm not sure what's going on here. It's just giving me a little bit of a technical hiccup, but this is basically, oh, okay, years to consider. Let's go 10 years here. And if we look at the 10-year historical tendency, the 10-year historical tendency essentially looks the same. You're looking for a buy point, somewhere at the end of February, beginning of March. So we'll be keeping an eye on that and looking for potential bottoming signals and potential buy signals in the market. It seems that we have a pretty good, potential move up from the beginning of March, end of February, beginning of March into I guess the end of April or somewhere thereabouts. So, I think as insofar as the stock market goes, let me just change this back. Insofar as the stock market goes, I think we really just need to be patient, and I'm not really interested in the short side yet, but I'm not really interested in the long side either. So, if the seasonal tendency sort of plays out, this would be a good explanation for why we're not really, doing a heck of a lot. So let's jump over to the S&P. Let's look at the sister indices and see if we've got the same scenario going on. The S&P broke its 5 ATR 20 as well, but it's into, this kind of confluence of support. Let's see where the fibs come in from this major low to that major high. They come in a little bit lower. If we take it all the way back to this low, it's even lower. So, you're really in the same boat here. You've got a zone of support here that lines up with this trend line, that 50%, and 1750 to 1720, let's call it. You've got a whole area of support, down in this area here. So same, basically the same analysis as the Dow. Let's look at the Nasdaq. Nasdaq did not break its 5 ATR 20, but you've got the same indications. You're holding the MACD 0 line. You've got a trend line support coming in lower, major support coming in around 3398-ish, 3400-ish in the Nasdaq future. Same, basically the same analysis here. We're just looking to see if we're going to find support and potentially move higher. Let's look at the Russell futures. So the Russell futures are right at their 5 ATR 20, same analysis basically as the Nasdaq, but the Russell futures, you can see, when you're in an uptrend, the 5 ATR 20 seems to hold, as a line in the sand pretty well. The last time that happened was back in this area here, back in August, September 2013, and we've been trending higher. Now we're right at this kind of critical line in the sand. You can see the 8-period moving average crossed below the 21. At that point, we just went sideways and then we resolved higher. So we'll look to see if we do the same thing here. I'm not that interested in the short side for the simple reason that momentum is potentially bottoming. Unless we're going to kick off, a trend reversal here where momentum can stay, to the low side for a long period of time if we start trending. But, because we've been trending higher, momentum is bottoming, I'm going to look at that as a potential, area of support. So I hope that makes sense. Let's look at the transports. Transports, same situation. All these charts look the same, and we're just holding on. We're just holding on to the cliff of support. Let's take a look at some key currencies. Let's look at the dollar index. The breakdance fight continues. Dollar index is higher above 80.86, but we're just sideways. But we're, today, at the close of this week, we're more bullish than bearish by by most indications and by where we are relative to support. We're above 80.86. Let's look at the euro. The euro is just breaking down to support. I think at 134.20 might be a level for us to come down and test. And then if we get through that, 132.82 would be the next level I'd be looking at, just jumping levels. We've been talking about that going back for some time. Let's look at the USD versus the CAD. So the USD versus the Canadian dollar has been pretty strong, where, you can see here we're trending to the high side pretty strongly. We've hit $1.12. We closed at about $1.11. This is a pretty strong market. I think at this point in time, a pullback would make sense, but you can see our stochastics are buried to the high side, which indicates a pretty strong trending market to the high side. So you've got support at about $1.10 now. That seems to be, that was our target before, but we could come into $1.10. We could come all the way down to $1.07.5. As long as we hold $1.07.5, I think we're still looking at potential upside there. But we are sort of due for a pullback here. Let's look at crude oil. Crude oil, we caught this bottom here, and now we're just sort of into an area of resistance. I'm still not that confident we're going to get above $100 a barrel. So there's not a heck of a lot to talk about there. We've had a bullish crossover of the moving averages, the 8 versus the 21. Now, we're fighting with zero line resistance on the MACD, and we've got our stochastics, to the high side. Just not a heck of a lot going on. You've got 5 ATR 20 resistance above us. Let's look at XOP, oil services. And for some reason, we're not pulling up that chart. Okay, so we're just kind of sideways here. We've got a seasonal tendency to go higher in the XOP, so I'm going to be watching this. We seem to be, just hitting support around 64.83 and holding that. So this will be interesting to see if we can get above, these highs around $69 and see if we can get something going to the high side there. At this point in time, we're just sideways. Let's look at natural gas. Natural gas has been a pretty crazy market, probably because of the weather. But you can see here we are tracking higher, but we've had some pretty volatile days here where we went as high as $5.50, and then we closed around $4.94. So at this point in time, I'm not really all that interested in trading natural gas, but just to point out that this is a pretty crazy market. And, we still have a long side bias on it until and as long as we, we're trending higher. So let's take a look at a couple of the metals. The theme here is just, I don't want to draw this video out, but the theme here is there's just not a heck of a lot going on. These markets are pretty, not really doing a lot. There's not a lot of market energy. There's not a lot of trending. There's not a lot of things that are that interesting. Like you can see gold here. I think it's a little more bullish than bearish, but it's just, it's overbought, and it just looks like, it potentially could go sideways or higher. It just, we tagged the bottom of this zone. I don't know if we're going to get to the top of this zone at this point in time, but as long as we hold 1191, I guess I'm a little bit more bullish than bearish on it, but it just looks like crap, right? So let's look at the silver. Silver just holding on to support here. Looks weaker than gold. Looks like crap. Let's look at platinum. We don't really look at platinum a lot. Platinum is starting to, have a mini trend higher, and I think we're probably into a fib support level here from this low to this high. Yeah, we're right around the 618 there, and we're into the 5 ATR 20, line in the sand. But it just, it just looks like a wide sort of sideways range. It looks like crap too. And let's look at copper. Same thing, not a lot there. Let's look at the bonds, 30-year. 30-year bond looks higher into this retest of this high. Looks like, the interesting thing about the bonds here is, let me just mark this actually. My trending indicator is just turning positive. So we are overbought, but the trending indicator's just turning positive after being negative for a long period of time. To me, this usually means we're probably going to get a decent move. So if we get a, if we break this high, I'm looking to see if we're going to break this high and bonds are going to go higher and interest rates are going to go lower. To me, this is sort of a, the most interesting thing I see right here, where we could get a potential move above there, see if we can get something going back up to the high side there in terms of a trending market. Where could we go from here? Well, we got to look at where we've been in the past. The last major trend here brought us from this high down to this low. So, you know, the 50% retracement, let me delete some of this stuff. 50% retracement would bring us right into 135 and 21/30 seconds, 136 and 13/30 seconds, you know, and all the way potentially up to 138 and 21/30 seconds. So we'll be keeping an eye on that. You can see the we broke the 5 ATR 20 to the downside. As long as we're not just going to go sideways and we break, you know, we break this high here, then we have the potential, you know, to move into some of these higher levels. Seems pretty obvious. Let's look at the, I mean, it's pretty obvious that if we break that high, we're going to go into higher levels, right? But I mean, this is sort of a big deal here where we could get a move, you know, through there into these retracement levels. Let's look at the 10-year. And we're above the 618 of that move by the looks of it. So we could retest these highs and then look to see if we can get a move from, you know, retracement of this last move, which would bring us into, well, we're already into the 50%. 618's around 126 and 24 half. 126, 24 half. So that would be a retest of these, the highs of this peak in and around here, which happened back in October, November of 2013. So let's look at the interest rates, TNX.X. This is the yield on the 10-year. That looks a little bit lower, but, you know, momentum is sort of starting to bottom unless we're going to start trending lower. So we've got support coming in around 24.66 or almost 2.5% in the 10-year. So, you know, that's all I really have this week. There's, you know, the theme is there's not really a heck of a lot going on. And we'll just look to see if something interesting develops going into next week. So stay tuned for an announcement coming out next week. CSTA Oakville on, I guess that would be February, the second week in February, which would be on the 12th. I'm going to be presenting to the Oakville group, just wrapping up and summarizing the trading and investing plan development from the last 5 or 6 speakers that we've had. That should be interesting. Come on out and check it out. I'll be posting that out with this video probably in a couple of days. Not with this video, but in a couple days. So just stay tuned. That'll be coming out. You'll probably have a week's notice before the meeting. So I hope that helps. Good trading, good investing. Stay safe, you know, in the markets. I'm not going to be looking to jump into anything personally. I'm going to wait to see what the market presents and, you know, just stay patient and look for opportunities as they arise. And if they don't, then I just won't be doing anything until that happens. So hope that makes sense. Good trading, good investing, and we'll look to see you soon. All the best.